for the panel discussion on modern financial fintech infrastructure. Without further ado, let us welcome Mr. Amit Goel, the country head, India, and Vice President, Prove. Please welcome our esteemed set of speakers, Mr. Michael Fitzgerald, Head of Corporate Strategy, DriveWealth, Ms. Treasa Mathew, the Director, Omidyar Network India, Mr. Madhusudanan R, co-founder M2P Fintech. Dear delegates, request you to keep posting your questions on the chat box. The panel may pick up a few in the end and answer to your queries. Over to you, Mr. Goel.
Thanks, Swati, and thanks to the organizers. It's been a great event so far. And I'm very excited to discuss a topic which is very close to heart called modern financial fintech infrastructure and APIs. It's close to heart because, I have done some work in this space with companies. I've invested in some of the companies in this space, and I have watched companies like, Stripe and Marketa grow from very, very small. And today we have some really leading companies in their respective spaces. Just again, a little bit of deeper introduction. Madhu is the co-founder and CEO of M2P. M2P works with the who's who of India fintech and FinServe and tech. Some examples are companies like Ola, Cred, BharatPay, ICICI Bank, Yes Bank are their customers. And they're very heavy on the payment side and banking side as far as fintech APIs and financial infrastructure is concerned. Treasa is a director at Omidyar, which is a fund which has invested in companies like M2P and Discovery, and we will talk about that. The interesting part about this entire topic is that it cuts across payments, lending, insurance, investments. And therefore, we also have Michael, who comes from an investment infrastructure API company. If you're in India and if you have invested using IND money or vested in US stocks, the chances are that you have used DriveWealth, which is the company that Michael belongs to. So we have a really, really good panel here. Before I start, I would like to just ask each of the speakers to basically introduce themselves a little bit more, and then as an opening statement, if you can talk about what's happening in this space, how the e-plumbing and financial rewiring which is happening, how is it shaping up financial services overall, how has it changed the delivery of experiences in this space, and also a little bit about how big is this opportunity, and what is driving it, right? So a bunch of questions in your opening statement. Treasa, why don't we start with you?
Sure, thank you, Amit. And hi, I'm Treasa. It's great to be here, and thanks for having me. As Amit mentioned, I lead investments in financial inclusion at Omidyar Network India. We're an investment firm focused on social impact. Financial inclusion is a major area of interest for us, and we have 15 fintech companies in our portfolio. And we believe that financial infrastructure providers have strong potential to advance financial inclusion, and we have invested in two very promising companies in this space, M2P and Discovery. It's a space we are really excited about and looking to do a lot more in. With regard to how the financial infrastructure providers have rewired the delivery of financial services, I think they have really helped decentralize the origination of financial transactions. By building the enabling digital rails, these companies have allowed financial services to be easily embedded within pretty much any consumer-facing platform. And today, digital payments is already quite ubiquitous at customer checkout points, thanks to the evolution of the payments ecosystem over the last decade. But even in credit, insurance, and savings, we are beginning to see a number of embedded finance use cases, ranging from buy now, pay later products offered by retailers, insurance products embedded with travel bookings, purchase finance offered on B2B commerce platforms, and so on. But today, it's mostly the large digital platforms like Flipkart, Amazon, and Ola that are able to embed financial services within their customer journeys. But thanks to these financial infrastructure providers like Yap and Discovery, all types of businesses, online and offline, as well as fintech and non-fintech, are today able to offer contextual financial products to their customers. And in that way, I believe they have really helped democratize the distribution of credit, insurance, savings, as well as payments. And as consumer journeys increasingly move online, I think in a few years we will see embedded credit, insurance, as well as savings also becoming ubiquitous, just like digital payments is today. With regard to the drivers, on the one hand, as we all know, the penetration of financial services in India is extremely low, and this is largely a distribution problem. On the other hand, every business wants to improve customer experience, wants to build additional revenue streams, and financial services is the perfect opportunity. And thanks to these fintech infra APIs, today banks, insurers, asset management companies are all able to offer their products through APIs to any platform that wants to distribute them. And providers that way are no longer really limited by the reach of their own online platforms and branch networks. I mean, we will soon be able to invest in mutual funds and fixed deposits even on Amazon. So we believe that an era of active collaboration between licensed financial institutions and consumer platforms is unfolding. And while this unfolds, the financial infrastructure companies, who provide the enabling digital rails, will have a massive opportunity. These companies are working behind the scenes to help these platforms seamlessly plug into financial institutions, roll out these products, process the transactions, provide the reconciliations, and ensure regulatory compliance. And as customers, increasingly move online for their consumption needs, their financial behavior will also become more digital and embedded within their consumption journey. So we think that this will really help provide more contextual, more relevant, more real-time financial solutions to customers in a cost-efficient manner. And API banking could well become as ubiquitous as internet banking or mobile banking in this decade.
Thank you so much, Treasa. That was a lovely and very detailed overview. And since you mentioned about payments, and I completely agree with you that as far as financial APIs are concerned, I think payments has seen a full-blown kind of maturity curve, right from just distribution to all the way to embedded finance, in its full glory. So maybe that's a good segue. Madhu, maybe you can answer that question since you are pretty big in that space on the payment side.
Yeah, thanks. Great. Amit, I think we have spoken about this quite a bit. So great to be here, in this panel. The way we look at this evolving, is at two counts, right? At a global level, what's happening on infrastructure side is very important because a lot of what we have built has been based on what we saw in other markets play out. And I often refer to this as a cloud moment in banking, right? By that, what I mean is, 15 years ago, if you had to, go out and build an internet business, you would actually go buy, hardware. You'll assemble a team to manage the infrastructure. You'll actually have server rooms in offices, right? Today, you could do all of that with a $100 credit card, right? Anybody can start an internet business with just a 5,000 rupee credit line, if you can sign up for AWS, right? What transpired in the last 15 years is just the sheer fact that somebody sort of rolled up the whole infrastructure and made it available over APIs and made it easy for businesses to come in and operate, right? And whether we like it or not, banking technology is going through that moment where increasingly bankers are realizing that technology procurement cannot be done in silos, and distribution cohorts are, in a manner that is growing, where you have to be, completely aligned with what the demand side is sort of expecting from you, right? So therefore, we believe that from here over the next course of next 1 or 2 decades, we will actually have, infrastructure being unbundled completely outside the bank, and will play out exactly the way, cloud computing has sort of played out, right? Where you could just connect in for a particular product or service and have that maintained based on the need that you have from your customer segmentation standpoint. That's at a global level, and this is a phenomena that's playing all over the world. We see this in multiple markets. But if you actually double click on India as a market, India is a very, very different animal. We are the first world country as far as payments are concerned. We are way ahead of US. We are way ahead of Europe, because the challenges that neobanks and some of these fintechs are solving in some of the markets in the West are very foundational challenges around moving money in real time, having cross-border playbooks operate efficiently, ACH working in a matter of seconds. So therefore, we have solved for all of that, right? So the arbitrage around payments is absolutely nothing, right? It's a loss leader. You can't make it more efficient than what's already out there in India. And to the extent that a lot of what's getting built in India is actually getting exported to other markets. As we speak, in the Middle East, we are having conversations with variety of bankers to see how we can build a platform like what has got built in India, not just on UPI, a wide gamut of products and services. So in some ways, India will become the fintech factory for the world, and we are kind of hoping that it happens sooner than later, and we are a benefactor of that movement. I'll probably pause here as just my opening remark.
Thanks, Madhu. That was a great analogy to talk about cloud and internet. When I was posting about this session on LinkedIn, because I started my career in the automotive world, I was talking about, when you see a car, most of the people who sit in the car, they don't know about what is under the hood, the engine, the drivetrain, and all that. I feel like this session is all about that, right, in financial services.
Yeah.
So with that, I would ask Michael his perspective, because one, it's in an area which is not huge in India right now as far as infrastructure and APIs is concerned. And secondly, because you have a very sort of US and global view. So it will be great to hear your views, Michael.
Yeah, it's really nice to chat with folks that have very similar DNAs and approaches to modernizing infrastructure for digital finance. So DriveWealth is a global pioneer for embedded investing, and what that means for us is providing the infrastructure for retail investors anywhere to be able to invest any amount in any U.S. security through any device. And so fundamentally, we've modernized the infrastructure to provide that, and are working with a lot of the leading digital wallets, neobanks, digital brokers, and technology companies around the world to allow their customers to frictionlessly, take 100 rupee from their digital wallet and invest it in Tesla, all in real time, all individually traded and have the same sort of price efficiency and speed that you would have if you were buying 100 shares of Tesla. And so, we have been really excited about what we're seeing in India. You've seen the explosion of the retail investor during the last, 1 or 2 years in India. We saw that they added 15 million new retail accounts over the last year. You're right, Amit. We're just in the first phase of enabling this product throughout Indian partners. We've been very fortunate to have folks like Stockhal and IND Wealth and invested in Goelwise, and who invested in partner and launch us directly, but also indirectly. We have firms like Axis and HDFC and Five Paisa who are offering this product to their customers through one of our partners to us. And so where this is very early stages of penetration in India, we liken this product similar to the growth of digital gold. When anybody could frictionlessly put any amount into digital gold, you think about the amount of folks who invest in the retail market in India, which is growing beautifully. But then you look at Google has 99% market share, and so every internet provider, anybody who accesses the internet does it through Google. Or you have WhatsApp and Facebook having 500 million customers. If you enable those customers to swipe left and move whatever amount they want to invest in those types of global brands, which have such incredible penetration in throughout India, we think there will be an immense attraction for this type of product. And so we're beginning to see it, but I think you'll see it over the next 12 to 24 months as we launch additional, large, Indian partners who are going to embed our technology and our product and offer to their customers. So really, really excited about the Indian opportunity and what our partners are going to do in that market.
Amazing. So this actually sets the context very well, and I think let's start by sort of sizing up the market. My DNA in consulting actually does not allow me to go ahead unless we talk about the size of the market and the TAM and all that. Maybe I'll start with an example. I visited Marketa when they were like a 30 people company in California, and I mean, after hearing about the proposition, I frankly could not understand that how can this become a big company. And over the years, I've talked to many VCs, and I've realized that it was very hard to believe that these companies can become multi-billion-dollar companies, and they have now. There are like 24 companies in this space who are like multi-billion-dollar companies. I would ask this to Michael and Treasa. That what do you think? How big can these companies become from here? Some of the companies that you have invested in, or you are seeing, or companies that you are part of, and how big is the TAM really in this space?
Well, if there's one component, so we launched our business, 7 or 8 years ago. And we started targeting India as well. We're a global provider, but let's speak about India and focus on that today. At that time it was pre-demonetization, and the number of investors in the local markets, were relatively small relative to the overall market size. But what we have seen and what has been most powerful to DriveWealth during its growth is how the total addressable market has just skyrocketed, not only in India, but across every market. Because if you look at the scale that the digital wallet providers now have, the payment providers, the neobanks, the digital brokers, the large technology companies, and their ability they're building an ecosystem to have retail customers not only, as Treasa said, not only invest, get insurance or get e-commerce but they want to have their retail customers live in that ecosystem. And so for their ability to simply control the investment experience of their customers and then connect to us through APIs, so we do all of the heavy lifting on the brokerage side, with instant onboarding and instant funding and instant trading and the like, the total addressable market is mind-blowing, honestly. Because you have, if in India you have, 25 different technology providers with tens to hundreds of millions of customers, and then you address that, we're not selling DriveWealth, we're allowing our Indian partners to offer, Amazon and Coca-Cola and these brands that people have incredible loyalty to, and all we're doing is providing the infrastructure to enable these consumers to become investors through embedded investing. And ultimately, our viewpoint is that you'll have investors, you'll have traders, you'll have stock, folks who are sophisticated investors. But what we're finding is that through embedded investing, where people are doing their normal transacting, consuming, and automatically they're building a little bit of a portfolio of their favorite brands through swiping and stock back, and neobanks providing a little bit of stock. You buy it, 100 pesos of Nike securities, you get 5 pesos of Nike stock. We find that to be much more powerful than the currently popular cashback options. And those funds, instead of the cashback going out of the ecosystem into the customer's pocket, everything stays in our partner's ecosystem. And so, this type of embedded investing is by far the most engaging, sticky. It reduces our partner's cost of customer acquisition and increases the stickiness of customers and the engagement in their ecosystem. So, long-winded answer of it, the total addressable market for this, it's almost hard to estimate. I just know it's 100x what it was when we started this business, which is exciting.
Right. And fantastic work with the fractionalization of shares, because since you were dealing with customers all over the world, I can't imagine how we can invest in Apple and Google stock at that price point. So I think you guys were the first to get a license for fractionalization of shares. So great work with that.
Thank you, Amit.
Treasa, yeah.
Yeah, I guess, I would only add that India is in fact, uniquely positioned, having built these public infrastructure networks such as UPI, account aggregator, the open credit enablement network, which are all based on an open architecture model. So this lends itself particularly well to API-led financial services and consequently the growth of open banking and embedded finance. So while, in India, we have companies like Yap and Zeta who provide, financial infrastructure for API banking, the market is still nascent, but it is, definitely growing rapidly. And we do believe that, multi-billion-dollar companies will be built out of India in this space.
Right. Now, let me actually change the topic because, there's a very famous saying on Wall Street that, stock market is not the economy. The economy is agriculture, manufacturing. And similarly, I think in this space, it's not about you. I think it's about your customers, right? That's what I have heard Madhu and Michael and everybody in this space talk about that. Obviously, a very common question then is that what are some of those use cases? Like how crazy have your partners gone in terms of thinking just outside the box and thinking of some very, very innovative use cases? If both Michael and Madhu, if you could mention some of the use cases, it would be good.
Madhu, you want to lead?
Sure. Yeah. I mean, so we are constantly sort of working with fintechs. So therefore, we have a lot of ideas that are that seem outlandish at the first word go, but we have the unique privilege of acting like a VC without a checkbook. So we hear stories, we hear pitches, and we see some of the companies grow. So and we have an unfair sort of advantage of the front row seat. But I think we have been working on wearables, for instance, for 5-6 years, right? So it's in vogue right now. But somebody had the foresight to basically say, how do we simplify payments and put that into a watch strap or a ring, right? So that's obviously everyone is talking about it now. There's a lot of stuff that's going on around how do we integrate payments and IoT sort of applications into wearables. That's one very unique sort of property that we built 5-6 years ago. We also had another a fintech that built out a driver engagement program, which was to help truck drivers be right incentivized for driving properly. But the underlying business was actually insurance. So you're basically tracking using monitors in the truck whether he's driving properly or is he accelerating too fast, so that you save on fuel. You ensure that accidents are fewer by incentivizing the driver, and that data gets fed into insurers to basically underwrite the risks much better. So it's payments, it's some of the applications around infrastructure, and then insurance. All of the and this was brought to life because there existed infrastructure players like us or Discovery to basically go out and figure out new models to underwrite a particular this is by far the most real, close to life kind of an application that we have seen where it didn't exist. And I would probably go out to say that without the infrastructure companies being in the picture, this would have never come to light, right? So yeah.
Right. And I remember many years back, you and me had a whiteboarding session somewhere, and you were actually thinking about building something like this to
That's right.
a journey now 4-5 years down the line where you are actually enabling all of these use cases that some of them actually you dreamt to build. And as a financial infrastructure company, you can actually now power these and 100 more use cases.
Yeah.
Right. Michael, over to you. So mention some use cases that you've seen.
Yeah, it's really interesting is that, historically, investing in the stock market was a siloed product. Your customers would have to move money out of their bank, wait for it to get to their broker. They would invest, even if they were online, forget about the phone phase and stuff like that, but just online. And it would just sit separately, just based on that customer individual wants. Now, right now, what we're seeing, which is really exciting, is that investing is just part of the entire data accumulation they have on each individual customer. And so right now, these digital wallets and neobanks and e-commerce companies that have so much data on their customers, they can help create portfolios that are actually based on the individual customer's action versus, a half dozen different risk questions onboarding. And so you're seeing these types of really interesting and compelling and engaging products being offered that are based on Amit's, all the data they have on Amit versus Madhu versus Treasa. And so, and then we think that's just going to continue to explode, where you have these portfolios based on not only a couple simple risk profile questions, but also exactly what resonates with you. Are you somebody who's interested more in ESG or women-led or clean water businesses, or you somebody who really is a technology or consumer based on what you're doing, not based on the questions you ask. And so, and then secondly, through our technology, the brokerage isn't a separate account. It's all hangs right off of the customers, the hub of the partners experience, which is really the wallet or the neobanking current account. And so customers no longer have to make a decision to move money from one to the other. They can do all that investing right in and out of the wallet completely frictionlessly. So investing in Starbucks should be no harder than just buying Starbucks. It's just swiping, and you never have to move money. It all happens on the infrastructure providers behind the scenes.
I just wanted to ask a quick question on that while we are able to invest in US stocks, does India allow US retail investors and other retail investors to invest in Indian stocks? Not at an institutional level, but at a retail investor level.
You only want the VC money.
Sorry?
You're happy with the VC money, I said. I'm sorry.
Yeah. So there is that opportunity. That's not where our wheelhouse is. Maybe Amit, you and Madhu and Treasa can create that company. But there is again this global it's basically just a globalization of finance, right? And we're just the four of us are just helping provide the pipes to enable it. And and as Madhu was saying, India has always had great pipes doing remittances into India. Having the banks make it frictionless and low cost to move money out of India, so folks can invest in any amount in the U.S. market. That's where the work has taken place. And so, but we think long term, you'll have a situation. Doesn't matter if in U.S. or India, you could be sitting in Indonesia and invest in the Indian market if you so choose. If you find companies that resonate with you, that ultimately is where it's going. And part of it will be powered by DriveWealth, and part will be powered by our partners.
Right. I'm sure the reason I ask this question is I'm sure somebody is going to ask me today itself that who's the DriveWealth for India? So I should be better ready with that answer. But let me move to a very important topic. I know, Treasa, you care a lot about that topic, which is financial inclusion. While we are talking about massive valuations, big companies being built, but where does all of this lead to the greater good, right? How does it help the population at large and serve the financial inclusion purpose?
Sure, Amit. So, access to formal financial services in India has grown significantly in the last decade, right? I mean, nearly every household today has access to a bank account. However, improved access has not really translated to active usage by these consumers, right? So, according to a recent survey by CMI, only 28% of Indian households had saved using formal financial instruments, and 15% of households had outstanding loans from formal sources. Insurance penetration, as we all know, in India is almost 50% below the global average, and there is high incidence of non-institutional debt among Indian households. And we believe that financial infrastructure players can really help advance financial inclusion, one by enabling a much larger distribution reach for financial institutions than they have today. And this is through partnerships with Fintechs and other consumer-facing platforms, many of which hopefully understand customers on a day-to-day basis. And two, by helping accelerate product innovation to suit the needs of these customer segments. Because a lot of products are designed for the top 100 million salaried customers. So we hope that as digital distribution gets enabled at scale, there will also be a lot more product innovation. That will lead to more suitable, tailored products to address the needs of these underserved customer segments.
Right. Okay. There was a little bit of parts of it which we missed, but I think largely we got the message. I don't know if it was on my end or your end with the network. But let me move to the next one in the interest of time. Question for Madhu and Michael. I want to know, and I'm sure the audience wants to know this, that how is the product and sales strategy different in a tech infra company or APIs company like the ones that you run, as compared to, say, some of your customers like neobanks and fintech companies? How does it differ from at a product and a sales level?
Sure. Yeah, I think the way this plays very differently in India and very, very differently in other parts of the world. I'll take the India part of it first. Today, India, most of the fintech action, a lot of the banks actually have their ears to the ground, figuring out what's happening, what is actually working, what's not working, what are the things that they can fine tune. And the good news is that in a lot of products, bankers are also now a lot more amenable to try out. A case in point being when BNPL played out over the last 4 or 5 years, as you would know, there are a bunch of companies that have done exceedingly well on the fintech side. Now bankers are thinking about how is it that we can sort of do that in a differentiated manner. There's already they are a store of trust, and is there a way for us to use that as a as a acquisition strategy or better risk management strategy, and they would prevail because of their balance sheet strength and how they can sort of lend to people and the physical infrastructure that they have to collect that money, more importantly, right? So we believe that we will have a lot of these ideas that are laid out by the fintechs, banks coming in and saying, can we do a better job of it, and can we expand that by even more? And it may not be competing, it might be complementing in some way or the other. We already see this complementarity sort of playing out where the grunt work is done by the fintech, but there is a whole lot of compliance related activities that the bank can sort of pick in, and they've been able to find that balance. Globally, I think it's still catch up that banks are doing. They have still not. It's still seen competing, which is again a very unique India thing where we have found a way to sort of coexist, right? In the sense, coexist and sort of thrive, right? A lot of the fintechs, if you look at on the payment side, there are multi-billion-dollar fintechs that have come in, and they actually work with the banks, right? So therefore, I think, and therefore, to my earlier point that in a lot of these business models, India will sort of lead the way for global franchise to actually pick up and sort of drive it, and that's how we see it happening.
Just on that point, quickly wanted to check that is it the difference, let's say, between US and India banks and fintechs is that US banks actually think that they are technology companies, especially the big ones like JP Morgan and all those, and they have more engineers than Google today, right? As opposed to India, where most of the technology was always traditionally outsourced, and they always had tech providers for doing pretty much a whole lot of things. Is that one of the reasons why so much collaboration is happening in India?
Yeah, I think there is what's the invisible hand in a lot of this is how we have been able to do public good really well, right? Because this is relatively new tech. The kind of work that's happening around data, for instance, it may not be visible on the surface today, but I mean, obviously, people in the know of that are all cheerleading it for now. But I think 5 or 7 years out, if you zoom out and see, we would be a very different animal with respect to how we are sort of consuming data. When you're the way I imagine this is that when you're browsing for a phone, by the time you flick for the colors of the phone, people will actually sort of make loan offers for you, right? And the magic actually happens in the background. This is real, right? It's already happening. People are building for it. It might take some bit of time for people to understand and sort of relate to it. And therefore, a lot of what we are doing is first generational technology work, and it's not band-aid solution over and above what has already been there. Like US is struggling because ACH they have not reinvented. PayPal, for instance, came 20 years ago. It is still a relevant sort of business where money movement was made to be simple, like sending an email, right? So therefore, I just think that it's just first principle thinking, which actually got like a big boost because of the public good infrastructure that we have built over the last decade or so.
Right. Very quickly, Michael, over to you. In terms of product and strategy, how are these companies different from some of your customers?
Yeah, when you talk about the sales, how are these infrastructure sales different than B2C businesses? Honestly, Amit, the elevator pitch to when we talk to our B2C partners is actually really quite easy and quite compelling. It's when we say we can enable someone to buy any amount of Apple stock directly from their mobile device in any amount in real time, they get it. They want it. And the technology implementation is actually very efficient and straightforward, and much easier than it is, investing or integrating locally with the local exchanges to offer local security. So it's not what it really is around 2 points. One is, our strategy is to target the number 1, 2, or 3 largest digital finance companies in a country, and work with them, and they have tens to hundreds of millions of customers, and they also have a very full roadmap of products that they're coming out with. And so what's really happened over the last 12 to 18 months, as you've seen in India and globally, the explosion of the retail investor and the impact and their interest, this product has just shot up as a must-have product for our global partners. The part that is the complicating part is it's a new product, and there are regulatory components both in the local market and in the U.S. market that our partners need to consider, and we have to both be compliant with. And so it's an enterprise sale with a regulatory component with it, so it does take some time, and these are all C-level decisions. But we basically come up with this. We basically deliver a highly consultative, basically U.S. investing in with a single source vendor partner and technology partner, which really makes it much easier for our partners to understand not only how to get it, but how to do it in a compliant and efficient manner. So it's I think that you'll see in India, as we're seeing in a lot of the markets of this hyper growth, is that once 1 or 2 of the leaders want it and launch with it, there'll be a rapid uptake, across the board, and that's what we're seeing in many of our markets.
Right. That's a good segue into. I wanted to ask that this question to Madhu and Treasa, specifically for Indian market, that there are a lot of new fintech startups which have come up. Right. We usually talk about 2,500-3,000 fintech startups which are there right now, and I feel that a lot of them actually come to you, Madhu, as an example to enable some of the solutions. So. So do you think that these companies are able to compete with the big tech companies and the verticalized SaaS companies because of financial infrastructure API companies? Otherwise, I don't know, it would have been very hard, right?
Yeah, I think it's always the David versus Goliath race in terms of the smaller companies. The larger companies at some point tend to get a bit more organized, so that takes away the nimbleness and agility to actually execute. If you're a hustler and you're in a small startup, you will find ways to see where is that opportunity for you to sort of hammer it out and grow, right? And also in a large market like India, there is just massive opportunity because the denominator is so large and it's growing, right? We speak about having 200 million people or 300 million people having access to smartphone, which is probably, puts us in the league of, in the top 20 countries maybe, right? So therefore, I think there is still massive opportunity if you cut it by either, geographical location or by, segmentation by any method, for newer companies to actually sort of go out and build use cases. And as you get larger, and this is, I'm just talking from a big tech company standpoint, you would tend to sort of democratize that product access, right? You would not want to build for, let's say, 2 million users. You would much rather focus on 200 million users or 20 million users. So I just think that, and the quality of companies that are getting built also is saying, am I able to address a very small niche segment very, very intensely? Look at Cred, for example. Their focus is not to go broad. They are doing like sub 10 million users, and the stated purpose is to serve the top 1%, right? So you'll have companies that will get built, which are very, very razor focused on a particular niche segment rather than going broad. That's the way I see it.
Treasa, from a VC lens, what would you say? Are you liking the companies that are coming up, which are building on top of these financial infra companies? So you're confident that at least the base layer is kind of well standardized and the ability to innovate on top of that.
Yeah, absolutely. I think it creates a lot of opportunities, both for fintechs as well as, we are seeing big techs also partnering with financial infra providers, right? While, for big tech, there is always the option of building these capabilities in-house. We are, in fact, seeing a lot of, large companies, being quite open to partnering with financial infra providers, because it, just gives them just gives them a much larger menu of products and providers to choose from. It gives them a timing advantage in terms of go to market, etc. So absolutely, I think the financial infra providers are playing a great role, both in democratizing the distribution of financial services, as well as enabling fintechs to build new use cases and address niche market opportunities, like we've seen with Cred, for example.
Right. A conversation like this is never over unless you discuss about the challenges as well. So I want to ask this to Michael and Madhu, that what keeps you up at night? Are there a lot of integration challenges either on the back-end partners like banks, FIs, stock exchanges, so on and so forth, and also on the consuming partners, which are your customers? What are the challenges that you usually come across?
Yeah, I think... go ahead, Michael. So maybe why don't you just give a stab?
Yeah, it's interesting because with our product, we have to be we always have to work. We have to be a utility grade or exchange grade, because we deal with big partners and we deal with their customers' funds, money, and investment capital, right? So what keeps us up at night is really two things. One is, while we are going through this hyper growth and hyper scale and adding millions and millions of customers, we do try to do as much in-house as we can, and we built this from the ground level. But you do have other downstream vendors that you have to make sure can scale with you, and you have redundancy behind them should they not be able to scale with you as a partner. What's also interesting is that if you think about the digital finance companies we've talked about, is a lot of our largest partners and most successful partners were not brokers or advisors or before they met us. So they themselves are learning the responsibilities of what they need to do at scale for their customers to be compliant in their markets, while we are ensure compliance with the U.S. regulator. And so that is a learning curve. And so we do a lot of work with our partners to help them become more compliant, better financial investing partners for their customers, to ensure that we can scale this in a fully sophisticated manner. But I will tell you that the quality of the partners that we work on the infrastructure side have just continued to improve. It's just there has been a benefit of this global shift to digital financial, is that the partners are just more sophisticated, more scale, and they can scale with us.
Right.
Yeah, in fact, the way we look at challenges are like multifold, in the sense we obviously have banks, and for a lot of good reasons, it's changed for the better over the last few years in terms of their tech and how we integrate and all of that. There's a lot of standardization also that has come in. But we are, we kind of tend to carry the arrows for many of the ecosystem sort of things that can break. Right? We are trying to bring things together. There could be a KYC partner who is, failing something. There could be some other external provider of the bank which is not, working. we would be the one whose API is not giving the right response. So I think in a lot of these situations, how the tech and how the backend sort of works, appreciating that becomes critical, right? It's not a we would not be in business if things are continue to fail. We have to just make sure that the right communication is laid out to customers. That has been the biggest challenge. You would have some marketing campaign that a fintech is running, and the last thing that you want is bank servers not cooperating for it, right? Now there is a lot more, for lack of a better word, pragmatism in the way we sort of program manage the whole thing. So if there's an event, you have to give adequate time to the bank so that they prep up the system, they have support infrastructure to whenever there is a volume ramp up that happens. That I think is still we have to fine tune a bit more to get to that perfection.
I think we have exhausted the time, but let me just ask one last thing, probably like a one-liner or one data point that you can share. What does the future look like? What is the like the bull case or the bear case, right? For example, many years back when I talked to Solaris Bank, they were smaller than most of their customers. But when I talk to you guys, I know that you are probably bigger than 80-90% of your customers in valuation and size and all that. What does the future look like?
I think there would be a lot of technology companies with financial services licenses, contrary to how it's being done now. Financial services companies trying to become technology business. Like to your point earlier about Goldman or somebody in the US having a large technology team, the license would become a necessary supply side in a technology play. That's how we see it playing out over the next 10 to 12 years.
Right. Anyone else?
Yeah, from my perspective, I think that platforms like DriveWealth are going to power this democratization of investing across literally billions of potential investors, where folks can put a little bit in, and then when they need to pay a bill, they just swipe left and go pay the bill through their wallet and so. And I also think the traditional asset managers banks are recognizing that the way they've operated in the past is not coming back, and so they're beginning to figure out how they can modernize their product effort to keep their customers and compete with these large digital competitors who clearly have the scale now to compete. And so we haven't talked at all about what the traditional banks and asset managers are going to be doing, but we're seeing much more response from them now. To figure out how to work through their legacy infrastructure and technology debt to be able to offer these types of products.
Right. Treasa, any last thing before we wrap up?
Yeah, I mean, I think our whole case clearly is that, every company will become a fintech and the fintech infra providers will power that. And I guess that's a good note to end on.
Absolutely. Great. Thank you so much for joining. Thanks for your time. Amazing discussion as always. And thanks to the organizers for giving us an opportunity.
Thanks, Amit.
Thank you so very much for joining in. And it was indeed a pleasure for us to have you all. And indeed, it was, interesting insights which was given by everyone. Thank you so much, the panel and Mr. Goel for coming in and making this possible. Thank you all the delegates for coming and joining the session. Please stay tuned for the rest of the sessions for the evening. Have a great day and have a nice evening. Take care. Bye-bye.
Thank you so much. Take care.
Thank you so